I am from Funderbeam.
Yeah.
We are a blockchain-powered marketplace for investing and trading in startups.
Okay.
Okay, what would you like to know?
So when you say blockchain-powered platform, what part of that is the blockchain necessary for? How are you validating it? And so you're saying it's trading startups. Tell us a little bit more about what that means.
All right, full disclosure, I'm a marketing guy, but I'm gonna do my best. But yeah, so basically there are two parts of the platform. The first part is when the startups are raising. So as an investor, you can come in, you can invest into great companies, you can do it together with other investors. We make a syndicate. This syndicate is a special purpose vehicle that then holds the equity of the company. We then break this special purpose vehicle into a number of tokens. If it's investing 100,000 euros, then we make 100,000 tokens. And if you've invested 10,000 euros, then you hold 10,000 tokens. And then in the aftermarket, once the syndicate is closed, the money goes into the startup, then you can start trading those tokens. And those tokens, all the trades that you do, like how much you own, all the trades you do, who you sell to, at what value, that's written to the blockchain. So that we can verify them and they cannot be manipulated. And it allows us to make extremely fast and cheap transactions.
So just to clarify that, you are part AngelList syndicate platform. Once something is funded, you then turn into a stock market, right? So you basically say, here's 100,000 tokens that represent the value of this company. Now people can buy those tokens and exchange against those tokens. So you have two problems, right? You have problem number one, which is enough startups, enough investors to actually get the investment activity. And then problem number two is once that happens, enough people to care about that company to then buy and trade the tokens. Is that right?
Exactly. The challenge is that we have to create that liquidity, especially in the aftermarket. We have, right now, we just launched the platform a month ago. Right now we have 4 syndicates that are raising. 2 of them have already reached their minimum goal, so they will be syndicated and they will be tradable. 2 of the companies are also pitching tomorrow, so you can check them out and you can invest into them if you're interested. But yeah, you're absolutely right. It's on the secondary market, we need that liquidity. We need to be, I mean, the obvious value is that if you invest into a company, normally you have to wait 5 years or more before the company is sold or goes public, before you get your return. But here, if you think after a year, you think, okay, now it's a great time to go in and then, like, get my ROI, then you have that option.
So the blockchain really is just a story about security of that transaction. It's not actually necessary for the platform, right?
I mean, we need to be able to allow people to trade very, very small amounts very, very quickly and cheaply, and at the same time securely. And we wouldn't be able to do this without the blockchain. It's completely safe. We don't need trust. Every single token that represents a given share in a company knows who it belongs to and knows what value has been traded at.
Who do you see as your competition, right? Besides like AngelList,
yeah. I mean,
Funders Club.
Before you mentioned AngelList just before, and like when we're like feeling a bit frisky, we like to say that we are AngelList, Bloomberg, and Nasdaq in once. Because we also have a data platform with data on 160,000 startups and 20,000 investors. And that's all free. You can all go use it as much as you want to research competitors and so on, because you need access to data in order to invest. But for the different parts of the business, there are different competitors. There's no one out there doing all things at the same time, like we do. But obviously, there's a Nasdaq private market. They are kind of like trying to do this private market as well. So they're very serious, and AngelList is of course really, really big on syndication.
So are you doing the AngelList part simply because you want captive companies? Because you don't actually need that, right? Like here's what I'm trying to understand.
Yeah.
I'm trying to understand which part of your business are you hoping is the core part of the business? Are you hoping that the business is a crowdfunding platform, and so it's a way for a company to gain, or are you hoping the business is a secondary markets platform? Because those are very different dynamics. I like the idea that says, here's 100 companies that we funded in the crowdfunding platform. Now all of those investors have tokens, and all of those investors could divest their tokens into the general market. That's interesting on some level, but you could kind of get to the same place by just saying, hey, any startup that wants to take part of its equity, take your equity, build tokens, and put it into our platform, and we've now got a secondary market for you. So you don't actually You don't actually need one or the other to work. You need both to work in the way you're building it, which makes me worried as not only as an investor but just as a general business person. It's hard to serve both of those two masters of acquisition, because you're trying to acquire companies that need to raise funding, and then you're also trying to basically create a secondary market, and those are very different kinds of investment behaviors.
I mean, I completely agree with you, and it's a very, very critical question. The logic behind it is that crowdfunding has become quite well known, and we're doing syndication because we also want like more sophisticated angels with bigger ticket sizes. But for us, it's a way to start populating our marketplace. It's a way to get investors to all of a sudden, okay, if you're already comfortable with crowdfunding, then it's a way to get them over to the secondary market. And I mean, right now, the crowdfunding aspect of it is just, we need to start generating some revenue, and we're doing that with the crowdfunding platform. Right now, we're not generating revenue from the trading. First off, because there is no trading, but secondly, because we have a lot of ideas of great ways to monetize it. But to begin with, we just want to prove that it works, prove that it's possible, and we don't want any barriers for people to saying like, okay, you're not better than a stock market. You're also charging the same fees, and so on. Like, why are you any better? And we just want to prove that it's possible to trade startups. And like, you can go right now, you can go make a buy order for €1 worth of Funderbeam. And I mean, because you're you, I will actually sell you one of my tokens. Like, you can get it for the same price I pay for it.
Honestly, I know I'm dominating this for a second.
It's okay.
As I hear you talk about the business, I don't know why you actually need the crowdfunding part, other than it's kind of the sexy part of the conversation. It's there's a tidal wave coming of secondary market need, right? Of companies,
and those are so competitive.
So competitive. Yeah. I kind of feel like the value, if you built it right. So we're kind of in a vacuum because we don't know how you've architected it. Obviously, blockchain is an important part of that. But if you built it in the right way, any person who has a portfolio could put their portfolio into your system, and then find liquidity for a portfolio that they otherwise couldn't have liquidity for.
Now that's very interesting.
That's really interesting, right? As an investor who has something tied up for 10 years, and now I have a margin call, and I have to all of a sudden divest some of my portfolio, but I can't because it's not public. You all of a sudden provide a necessary part of an ecosystem. And to be fair, like, regulatory issues are going to be really challenging there, and so you're going to have an issue. But if you can navigate the regulatory issue and you've got the tech platform that actually works, that's much more interesting than trying to convince the world to be another crowdfunding platform. But that's my opinion about it.
I mean, I absolutely agree, and we're not trying to be the next big crowdfunding platform. There are so many people out there that are doing great jobs at that, so that's not our end goal. And to add to your comment on the regulation, that's really, it's definitely one of the biggest challenges, but I would also say it's one of our biggest strengths, because our CEO used to be the CEO of Nasdaq Estonia, and one of the other co-founders used to be head of compliance at one of the biggest banks. So we're not trying to challenge the regulators. We're working closely together with them to discover like what are the right ways to regulate this. And Estonia is a really progressive country. I'm not from Estonia, but I moved to Estonia for this, because it's a unique place to do these kind of tech startups.
So the question is, this is supposed to be mentoring, so this is helpful. Now I understand the background. What's your biggest challenge as you move forward? Besides the fact that you do have two business models, and that's really hard to execute. So I'm not sure, if I'm very, very honest, it's like trying to find your vector into the marketplace. Like, how do you get into a marketplace? And if you're talking about the crowdfunding part, it's not that differentiated, except for you have this blockchain piece. The blockchain piece is actually kind of the unique aspect of it, right? But anyways, the point is, like, what's your biggest challenge?
I mean, yeah, we are the first ones to do this based on the blockchain. It's the first ever. But I mean, there are a lot of different challenges to this. I'm head of marketing, so like from my perspective, and what I'm really keen to learn from you guys is that, okay, I'm head of marketing. I have different groups that I'm trying to target, like crowd investors, small ticket size people, and then there's like people who invest more, like at least 20,000 or so. And it's just like, how do I communicate this, especially the secondary market, this value? How do I find the right channel to communicate that out? Because all investors are just bombarded with messages about the next cool thing.
So my general feedback for stuff like this when you have a product that can be used by like, and this is relevant B2C, B2B, when it can be used by multiple sort of users. You have to start with a hypothesis of like, segment your customer base or potential customer base and go, hey, I think like the opportunity really is in the investors that are actually going to be spending more than $3,000 versus like the micro, I don't know, whatever the answer, but pick one of them and just go after it very, very hard. The route to failure is by trying to be everything to everybody, because your positioning, right? You think about your messaging, your positioning, your channels are going to be completely different with every single one of these different segments. And so you want to start as narrow as you possibly can, because you learn faster in this area, right? The more you learn, the more you figure out all these different things. Once you kind of crack that one, you go and crack the next sort of like segments, and it'll be very, very different. But you cannot, like, it's very, very different. I always talk to these companies like, I'm doing this, doing this. And I'm like, did you just raise like $30 million, you have 100 people working for you? Oh, you don't, you have like 3 people working for you, like this team of 3. You really want to hone all your precious resources and time into nailing one thing down. I mean, this is the death. Like, we've literally invested in, like, I have invested through my team and through my accelerator and through my seed. I've done over 210 deals, all right? Most of the companies that failed has been because they've been unfocused in what they're doing, right? Trying to tackle new business models, trying to tackle like multiple sort of like customer segments. Like, it's just unfocused, trying to build too much stuff, and they just run out of money and they get nothing done. The best companies are like really narrowly focused, and people go, well, isn't that dangerous? Like, that's risky. I'm like, no, because if you're going to, like, what if I'm going down the wrong path? If you're going down the wrong path, you're gonna find out sooner. And then you can switch.
I agree with that. The other thing I would say is, when you're entering a crowded marketplace, one of 2 things have to be true. Either you're massively differentiated, or you have an insane amount of money. You need one of those 2 things, ideally both, right? So, as I think about your business, I'm going to do something that investors should not do, right? Investors should never project the business they hope you are onto the companies. But let me do that for 1 second, because I kind of want you to be the biggest company I've never heard of, right? I want you to be the company that has locked up 60% of the world's LPs, because the LPs realize you're a secondary marketplace unlike any other that's ever existed. That's kind of where I want you to go. But what I will say, coming out of that zone for a second, is the reason your challenge is incredibly difficult is because I don't think as a company you figured out exactly who you're talking to, right? Because if you're talking to entrepreneurs, what they're going to want to hear is you're the place where they can get money. If you're talking to an investor, what they're going to want to hear is you're going to have the best companies on earth in the platform. But if you're talking to secondary market people, what they want to hear is this is a place to find liquidity. Those are 3 entirely different messages, 3 entirely different focuses. Frankly, every one of those has a challenge, every one of those has a sales cycle, every one of those has its issues about scaling and growing and reputation and credibility. It's impossible to do all 3 at once at your stage. You're going to fail if you do that. So you need to pick one.
Yeah, and as an investor, basically, you've just multiplied the risk at every single level, right? Everyone thinks that we're like, we run to risk, is like, actually we try to mitigate the risk. And so that's one of your biggest challenges. Like, you do these very complicated business models. I'm like, wow, this is like risky as hell. And I'm like, the likelihood of you being able to execute one of these things very, very well, already like pretty high, right? Like, just so your ability to execute one is just, it's really, really challenging. You multiply that by like 2, by 3, it's like, holy crap. Like, yes, if you actually are able to do this, it becomes a hugely defensible business, but like, the odds are just really, really low that you're able to do that. Anybody's able to do this, frankly. Yeah, we could do 5 minutes.
Thank you very much. I think we're going to open it up to the audience a little bit, because we've got about, it looks like 5 minutes. Are there just any general questions about business strategies, concepts, investment, just that you've heard that you want to know more about?